Welcome, traders, to another Tickmill trading update with me, Patrick Munley. Want to update the S&P 500 view using the emini futures contract. Put together a trade plan for the trading session ahead. Before we jump into the technical side of things, in terms of the macro front, we have a pretty light slate today. And key focus, I think, is going to be much later on in the day. We have the U.S. presidential debate tonight, likely the only debate we're going to see between Harris and Trump, and we'll see who comes out of that with a more favourable figures with respect to the likelihood of gaining the presidency. And I think that will probably have an impact potentially overnight if there is one clear front runner coming out of that. Obviously, the election won't be necessarily decided on the debate itself, but certainly participants will be looking to see who gains the edge in that debate if either candidate does gain an edge. And then heading into tomorrow, the focus is really on the inflation data out of the US, which I think will have more of an impact on markets. That said, let's move to the technical picture. On the weekly time frame, we are in the zone that I've referenced in terms of potential for downside to develop. The September 9th through September 16th time window is in play now. On the daily time frame, got a recovery yesterday. I didn't quite manage to flip the daily volume weighted average price bullish. We are testing that area at the moment. You'll recall that I mentioned with respect to range expectations for the week, this 134, 135 point level, which coincides with 55.44. That's going to be a key area. Also sits right in the middle of the 50 to 61.8% retracement of this initial leg that we saw to the downside develop over last week. And if we look to the sell-off that we saw late July, early August, we got that 50, 61.8% retracement after some consolidation, and then we got another leg to the downside. So from my perspective at the moment, whilst we hold this 56.70s as resistance, we have an equality objective to the downside at 50.73. You'll recall that I referenced this 5,000 level earlier in the summer as a potential downside target, certainly in terms of a symmetry swing move on the weekly time frame. We would be looking at 50.18. So at that stage, I would suggest the 5,000 will be a magnet, and that's the focus at the moment. Moving to the intraday setups. So I can see in terms of the weekly bull bear zone, we are sitting right at it, just above it, 54.85, 54.75 is the area I'm watching. And if we can get through there, then I'm looking at that and ultimately seeing a test initially into the 55.20, 55.30, but ultimately what I'm looking for is that 55.40 area to get tested. And so just adjust that marginally. So that's going to really be going to be the key test for me if we extend from current levels to the upside, watching for a test into that 55, 45, 55, 35 area. That's where I'm expecting the potential for higher time frame sellers to emerge and see if we can set up then for another leg to the downside. In terms of the intraday hourly time frame, whilst we hold support at the moment, value area low 54.50s down to 54.40s, I'm expecting that we test up into the daily bull bear zone at the 55.05, 54.95 level. But whilst this area then continues to act as support, I'm looking for an extension up into the 55.30s, like I say, 55.20 being that initial resistance. And as the bull bear zone then acts as support from above, we look for that 55, 45, 55, 55 test. And that is where I'm going to be paying very close attention for opportunities to set additional short exposure. The alternative scenario is we take out the 54.40s and trade lower, fill the gap down into the 53 gap. The open gap at the moment is sitting at the 53.96 handle. So if we get in there, fill the gap, we could see a bounce, but then as that 54.20 area acts as resistance, we'll be looking to extend down and to get a look at that 53.70, 53.60 area as the next downside objective. And through there, we will be looking for the 53.20s on the downside. Weekly projected range support, if we go back to our weekly chart, comes in at 52.75. So there is quite a bit of scope still on the downside, but I would anticipate that that's going to be a more of a post CPI focus. In the interim, I think we can see a further squeeze here up into that 55.40s, 55.50 before looking at new short positions. I have personally got long and short positions running at the moment. Let me just pull up the book as it stands. And put it on here. So that's my current positions that I'm running, and they are risk free now. Looking for I'm playing tactically long against the 54.70s here, being the value area low from the overnight session and yesterday's volume point of control. So if we can hold there, like I say, I'm looking for these 55.40s, and from there I'm going to be looking to re-engage on the short side. I'm still running the original shorts from the 56, 55 area, and I've trailed down stops to the 65 level on that position. But like I say, I don't sense a huge amount of activity today, but certainly we can, as we have seen in prior inflation releases, see a bit of a squeeze into the release and then see what sort of directional move we get out of that. So, as always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.